morning. Thanks for tuning in. This is Peter from Global Market Signals, and today is Monday, November the 23rd, 2020, and I'm going to review gold, silver, the junior miners, the senior miners, just do a little bit of quick analysis on where we're at today in terms of the market. Today's a breakdown day for gold. Took out the pivot low from September the 24th. All along, we've been talking about potentially a target on the downside here of 1770s. This was the high from 2011, this line here around 1823. The true breakout point is around 1970, 1980. I think we need a weekly closing above this pivot high here for sure in order to, make sure that gold's in a bullish stance again. Everybody was jumping for joy here. We had this downtrend line. We took it out. As is the case with any trend line, you want to have at least 3 consecutive days closing above a trend line in order to, make the trend change valid, or below, I guess. In this instance, first day close, second, third candle, total reversal. This is called the bearish engulfing candle. This one candle engulfed all of these candles here, very, very negative, high volume. Now we're into what could be a waterfall move down. We hope to see some sort of bottom here before the end of the year. Seasonality turns very bullish in gold in the next 2 weeks or so into the first quarter. So this is that's one thing to look at. I mean, if these are sort of timing dates on a chart. It's very complex, but we're into a period where we're certainly going to trade into support and into some potential direction changes. If we look at silver's sort of holding up much better. I mean, these tails here are, we haven't violated anything here yet. This is actually much, much more bullish. Now, if silver were to take out this 2181, I think, which was the low on September the 24th, I think we could have a waterfall moment in that too, down to 2050, potentially down to 1880. That would be really, really good. Nothing's changed in silver until we take out this downtrend line. This line here, we really need a closing now sort of above 26 on a daily, preferably weekly basis. That would get things back into a bullish stance with silver. And on the timing models, we're looking at, it's just the whole convergence of dates. There is a slight possibility here that we have a bottom here again this week. Last week we had a bottom midweek. We rallied $1.50. It failed. Now we're back down. This week could potentially be a bottom as well. So we'll see. We have to keep an eye out, be vigilant. On the junior mining index, this is actually, we took out the top of this channel, this trading channel here. 1 day reversal, no follow through. So that's invalidated. Technically, we have to now probably test the bottom. We want 3 points of contact, typically a minimum 3 points of contact on any line to make it valid. So here we have sort of 1, 2, we didn't touch here. Now we want to go down, test this in the 47 to 48 range. We're not that far off. We're 49.58. Very possible that we come down here, quickly test this and reverse. That would be the ideal setup. The senior gold index is a little bit different because we're actually trading down and touching that channel. So it's potentially possible here that we take this out. But, we have lots of support here in the 32 range. So I think we'll probably bounce off of this bottom area here and then potentially build ourselves in on a reversal candle and get back up into this channel. Once again, I mean, we can violate any trend line, but you need 3 consecutive closes below or above any kind of trend line, trend channel, or anything like that to validate it, right? So here we look at the gold miners, the junior gold miners divided by the senior gold miners, and you can see here, if we look at a weekly chart, this is the junior is on the top, the GDX is the denominator, which is the senior gold miner. So if we see this line rising, it means the junior stocks are rising relative to the senior gold stocks faster. So this hasn't really broken down, so they're holding their own right now. I think once we take out this $1.51 level here on this ratio, I think you're going to see a big explosion in the junior gold, in the junior mining sector. And once again, we go back to the junior mining sector. Look at a monthly chart on this, and you can see sort of the pattern unfolding. It's very beautiful, very symmetrical. That's what we want. We want to see a symmetrical chart pattern. We see the high here, 2014, July 2014, then another one here in July 2016, then this one. I mean, this touched that line to almost the exact amount, August 2020. So now we have a retracement. We can do a Fibonacci extension on this. If we run a Fibonacci extension on this from the move on March 24th up to here, back down on this junior gold mining sector, the Fibonacci extension takes us up to about $98. That would be our next target move. I'm guessing it would stall out somewhere here in the 70s. Remembering these lines are all rising as we go into the future. But ultimately, once this bottoming process finishes here, our next target is going to be up here at the high end of this channel. So we want to be vigilant and ready to bounce, are ready to pounce on any opportunities here in the junior sector. So those are some things to keep in mind. Once again, we're sort of on the daily chart, just in the bottom here. We broke down. We probably need to test this 47, 48 range. Potentially this next week here, we could have some sort of bottom forming. If we were to take out these lows here intraday, I mean, unfortunately, the sort of, the next level of support is 42. And if that doesn't hold, excuse me, then we're down to about 33 and change. So hopefully we can hold this here. Technically, that would be good. Seasonality, as I said, kicks in really, really strong here into the next 2 weeks. So starting next week, actually. So we have a 80+% chance of a rally in gold and silver from basically the last week in November into the last week in February. So keep those things in mind as you look at the market. Anyway, in the meantime, I'll do another video here on the broader markets in general. In the meantime, please like this video and subscribe to our channel, and thanks for tuning in.